Traders and investors are still taking in that blowout jobs report. So unexpected. Dan Deming is on it for us today. Dan, what are your three to watch in another busy week for the market?
Yeah, Angie, when you look at this week on the heels of that very strong jobs report last week, it'll be interesting to see how the market reacts, given the fact that we're seeing interest rates moving higher once again. We're also seeing market momentum shifting to some degree in the equity market. So those are a couple of things. Now, this week, we also have a lot of Fed speak, so that could influence the market. And then we have some data points later in the week when you look at CPI and PPI, and those are going to be some other factors contributing to the market action this week.
So we can understand, Dan, in the easiest terms possible, explain why the surge in hiring in September is causing bond yields to aggressively soar.
So, Angie, when you look at that jobs report last week, the interesting dynamic is that the strong labor market, that shifted sentiment within the markets in general, as the labor market does appear to be much stronger than anticipated. That indicates the economy is much stronger than anticipated. And therefore, we're seeing the bond market selling off, pushing those yields to 1-month highs. They're even higher than they were before the Fed cut, given the fact that now the market is discounting a little bit that the Fed might be not as aggressive as initially thought, given the fact that the economy and the labor market remains in pretty good standing.
Well said, Dan. Thank you.
All right. Thanks for having me, Angie.
Go to businessfirstam.com for where to see our show on TV.